welcome back to another Stocks for Teens video. Last week I was supposed to post a video, but because of a busy schedule, I didn't have enough time to make content and film, so because of that, I'm really sorry. But moving on, today we're going to be talking about style stocks. As always, I'd like to start this video off with a quote, this time from Philip Fisher, a famous American investor and author of Common Stocks and Uncommon Profits. He once said, "The stock market is filled with individuals who know the price of everything but the value of nothing." This just proves that, again, without proper education and research, you're most likely to make bad decisions leading to consequences. So there's no harm in educating yourself before investing. With that in mind, let's get on with it. So today we will be talking about the different types of style stocks. Before we start, I've mentioned a couple of specific stock types here that we've covered in the past, but are worth having a brief overview about because it sets us up for what style stocks really are. First of all, market capitalization is the total dollar market value of all of a company's outstanding shares. So market cap stocks are stocks of companies who fall under these different market cap ranges. There are 5 price ranges that market capitalization falls under, and that's micro cap, small cap, mid cap, large cap, and ultra cap. It's up to the investor and their preferences if they want to invest in these different caps. And if you don't remember what the price ranges are for each of these different caps, then go check out my first video, Stock Fundamentals in Under 12 Minutes, because that video covers all the basics about stocks and market cap, so go check it out. Moving on, we have also covered stocks from different sectors. Sectors represent industries that companies fall under once they enter the markets. So investors choose stocks based on performances within these sectors. Now that we've covered all of the basics we need to know for this video, let's get into what style stocks really are. Style stocks are stocks that vary in the amount of profit they give their investors and the time periods of these profits. The company size and its value and growth characteristics determine the style of the stocks they put out in the market. There are 3 different types of style stocks that we will be covering today, and they are growth stocks, value stocks, and income stocks. Once again, these stocks differ in the sense of profits they provide and the time intervals these profits come in. First, let's start off with growth stocks. Growth stocks are any shares in a company that are anticipated to grow at a rate significantly above the average growth for the market. These stocks usually don't pay dividends, so when investors invest in growth stocks, they are in it for the long run and only expect profits after a long period of time. Companies that issue growth stocks are expected to grow sales and earnings at a faster rate than the market average. However, growth stocks might look expensive, trading at a high PE ratio. If you don't remember what a PE ratio is, then go check out my Fundamental Analysis Part 2 video. Because of a high PE ratio, though, it provides a lot of opportunities, both for long-term and for short-term, because with a higher price to earnings, as growth increases, you can expect more profit. This also comes with consequences, though, because loss is high if growth stocks aren't doing well, therefore making it more risky to invest in. While growth stocks may be risky for stock investors, it can also affect companies as well, because if investor confidence goes down, then not many people will place their bets on growth stocks because of its riskiness, therefore forcing companies to decrease issuance of stocks and face tremendous loss. As I've mentioned before, companies who issue growth stocks do not distribute dividends. So the only way you can make profits is through selling your stock to another investor when prices start to escalate. A popular example of a growth stock is Amazon. So for those of you who use Amazon a lot, especially during quarantine, and if you're interested in investing in growth stocks, then Amazon is an option. Just as Amazon is a unique and popular, in my opinion, company, growth stocks are typically associated with companies that have unique products. Companies that issue growth stocks share common characteristics such as a good growth market, a record of strong growth in sales, and a strong leadership team in order to ensure that their stocks trend in an upward pattern and don't face any loss. Because if they do face any loss, then it will be a pretty huge amount. The next type of stock we're going to be looking at today is a value stock. Now, value stocks are different from growth stocks as they tend to trade at a lower price relative to their dividends, earnings, and sales that investors gain from buying them, making them more appealing to investors who want to invest in long-term projects. Again, like growth stocks, value stocks are more like a long-term project, but it's different in that it trades for lower prices. In this scenario, investors are picking stocks that appear to be trading for less than their intrinsic value, which is also known as the book value. Typically, people in the markets tend to overreact and pick stocks that don't correspond to their actual values. So during this time, investors who are looking out for value stocks get a discount on these type of stocks while others avoid it. This is an advantage for value investors as they know the stock will bring the same amount of profits, if not more, as other stocks. Value investors use financial analysis, don't follow the herd, and are long-term investors of quality companies. Out of all ratios they use to analyze the stocks, the most prominent are the PE ratio and the price-to-book ratio, which measures the value of a company's assets and compares them to the stock price. A lower value means the stock is undervalued. Investors typically set a margin of safety when they invest to be safe from losses, and investing in value stocks requires diligence and patience because it takes a lot of effort and time to evaluate the intrinsic value of a stock. An example of a value stock is JP Morgan Chase, which is a leading global financial services firm and one of the largest banking institutions in America. The last stock we're going to be looking at today is the income stock, which I would say is the most common stock type people invest in because of one reason: dividends. Income stocks are securities that pay regular and often steadily increasing dividends, and because of this, stock investors can look forward to paying their bills, unlike the other two stocks which provide more long-term profits. Most income stocks have lower levels of volatility than the overall stock market and offer higher than market dividend yields, which makes it really appealing. However, there are limited future growth options and potential for income stocks as it's consistency over riskiness. It can't be too risky or people can't expect dividends and pay on a regular basis. An example of an income stock is the retail chain Walmart and corporations, as they provide steady income to their investors in the form of dividends. We are done with covering style stocks for today, so thank you so much for watching. As always, don't forget to like, comment, share this video with others who are interested, and subscribe to my channel Stocks for Teens. I'd love to see more subscribers because that just means that I'm educating more people about the stock market and its basics so people can be successful in the markets. If you have any comments, please feel free to leave them down below. It could be suggestions for future content material, questions about this video in particular, or anything else you'd like to say, just leave it down below. But if not, see you next time.